Hello, everyone, and welcome back to the Bull Standard. My name is Peter Dwan. I also go by the Twitter handle BTC Bullwriter. And today I have with me Andrew and Jesse from the Smarter Web Company. How are you guys?
I'm good, thank you. How are you?
Yeah, beautiful, beautiful. So for those who don't know, Smarter Web is a UK-based Bitcoin Treasury company, which also happens to be the most successful IPO in UK history. So I guess why don't we just start by having a short intro for both you and Jesse.
Yeah, sure, no worries. So my name's Andrew, and I founded the Smarter Web Company. We decided to list it on the market in the UK. We listed in April 2025, so 3.5 months ago, approximately. And it's gone quite well so far. And today we announced that we've got 1% of all of the Bitcoin, 2,100, with a reasonable amount of cash that will be deployed into Bitcoin in the very near future. There's a lot more that we could talk about, but that's a brief intro.
Very nice.
Yeah, Peter. Today's a pretty fun day, an auspicious day, let's say, for the company, because it's quite a big milestone for our goal to become, one of the biggest Bitcoin Treasury companies in the world, one of the biggest holders of Bitcoin in the world, and certainly the leading Bitcoin Treasury company in the UK. We're already in that position, but we intend to continue to be in that position and grow into a company that I think we can end up accumulating 210,000 Bitcoin over the coming years. I think that's what's possible for the leading Bitcoin Treasury company in the U.S. And Andrew, I've joined Andrew in this mission. I've started helping out about 2 months ago now, so I missed the extremely wild first month, but I've been on along for the journey ever since. For people who I guess as way of introduction for me, I've been in Bitcoin for quite some time and have been contributing analysis and writing, first under the pseudonym of Croesus and then more publicly in the last few years. And people may have seen my global asset landscape chart that Saylor likes to use, and his valuation models is built on my valuation model as a starting point. So I helped contribute some of the intellectual basis for like the strategy of, wait a second, there's all this capital in the world sitting in these buckets getting not great returns, and strategy Saylor realized, we know that Bitcoin's going to be outperforming anything. So how do we find that capital, reach it, create the products that appeal to that capital in the world, and route that capital into Bitcoin by way of a Bitcoin Treasury company that creates these products to go meet capital where it's at. And so I'm super excited to be a part of doing that in the UK with Smarter Web.
Beautiful. And Jesse is too humble to brag on himself, but he also happens to be an ex-Bain consultant and an ex-Stanford MBA. So he is very, very technically sound from that perspective as well. So just to give you guys a little background in case the Smarter Web community doesn't know too much about me, I also have a 14-year traditional finance experience. I won't go into the details of that. But really, I joined this space, like about 10 months ago, following MSTR, and then saw an opportunity with Metaplanet to copy the MSTR playbook. And really, since MSTR is called the 800-pound gorilla, that is, I don't think, going to be surpassed because of just how far of a lead they have. Really, Metaplanet has become the gold standard of all these new Bitcoin Treasury companies in the regards that they have a great CEO who's very strategic. They have Dylan LeClaire, who's despite his young age, has been in the Bitcoin space for a long time with a massive social media following and very technically sound. And now they have a rabid community, which I'm very pleased to be a part of. And so I say all that because I observed the very same kind of, I call it the holy trinity of what makes a really good Bitcoin Treasury company. So one, as I mentioned, is that strategic CEO who wants to be the main player in their respective local market in the form of Andrew here, and then also a very technically sound Bitcoiner in the form of Jesse here. And then I've also observed that despite only being a publicly traded company for, as Andrew said, what, 3.5 months, you guys have been able to build a community that's over 3,500, which is very commendable. So I think that all three of these are very key kind of categories to make a very efficient Bitcoin Treasury company. And so I want to start off with talking about the UK landscape and how it's actually similar to the Japanese landscape in regards to its Bitcoin regulation. So Andrew, why don't you start off there? Give us a little bit of an overview on how does the UK currently view Bitcoin?
Yeah, so the UK has not been incredibly Bitcoin friendly for the last few years. I think is probably the kindest way of putting it. It's been incredibly difficult to buy Bitcoin. Even if you've just got a regular bank account, the banks are quite unfriendly towards it. Now, if we want to keep it positive, it's worth saying that since we've listed, the FCA, who's the regulator in this country, has actually unbanned retail investors from having access to certain products, specifically not ETFs, but ETNs. They're coming very, very soon in the UK, which is fantastic, a bit like they did in America 18 months ago. So I think the simplest way of saying it is that for a number of years, the UK has been incredibly unfriendly, but it's getting friendlier. So, the trajectory is heading in the right direction. For me, as the CEO of a Bitcoin Treasury company, that's really important, because what it tells me is that if we follow the path that we've seen in the States, where ETFs were actually a very positive thing for Bitcoin Treasury companies because we are completely different to an ETF, then that's a very, very positive sign, and also for the wider market, i.e. the citizens of a country. If you're told by the powers that be that something is okay, then you believe that it's okay. So a lot of the work that we do is on the educational piece, trying to make Bitcoin more understood, because we're a public company that's adopting it as our primary treasury asset. So if there's more stuff happening in the country where people are realizing that, what we've known for, in my case, almost 10 years, that it's the best asset in the world, it's giving that validity to it, which is really, really, really positive. What we've also done as a company is when we decided to IPO, because we're one of the few companies in the world that's actually IPO'd with this strategy, as opposed to pivoting to the strategy. So we IPO'd the business with this strategy. And what we've done right from the outset before we IPO'd is make sure that we've got all the governance or the regulatory controls in place. So yes, we're bigger than when we started, but those controls were in place from day zero. And I think that's given the regulators some confidence, in the sense that we're doing something that's clearly defined and growing it in a responsible way, albeit a bit quicker than everyone's expected. And we've tried to keep that at the forefront of all of our decisions. So yes, in summary, it's not been a particularly friendly place for many years, but it is getting better, and hopefully it will continue on that trajectory.
And to add on to that, Andrew lays it out perfectly there, that you do want to see that the regulatory climate is heading in the right direction, right? And that's an important input to anyone who's evaluating this company and our strategy. Peter, you made a great point of, when I was thinking about joining Andrew, I started to see the same pattern recognition that you were talking about here, of like, wait a second, this looks a lot like the setup from MetaPlanet 15 months ago, in so many ways, not only Andrew and how he runs his business and the skills that he's acquired by being an operator, and knowing his business inside and out the way that Simon did, but also in terms of the setup in the UK versus in Japan, for different reasons, but a similar theme of, like, in Japan, they've faced hard economic times for some time, and there's a huge debt burden, and people had, and for a particular reason of tax advantages of holding equities versus just holding Bitcoin, there is reason for investors to get exposure to Bitcoin via a public equity.
Right.
In the UK, there's similar sort of themes in this island nation that's, has a proud heritage and has faced tough times
Yes.
economically in recent decades. And there's also tailwinds for a company like this to deploy a strategy like this, particularly that retirement account capital in the UK hasn't had a way to access Bitcoin exposure in the UK. You can jump through hoops to get exposure to MicroStrategy, but a homegrown equity, there hasn't been anything like that, and that's part of what Andrew saw the opportunity to do, and that creates quite a bit of a tailwind, I think, where how else is £2 trillion of retirement account capital going to get their exposure to Bitcoin when they've been wanting to and haven't been able to? So I think that's part of the story here, and I think it sort of mirrors a lot of the setup that Metaplanet has enjoyed over the last 15 months, and then just the execution too of what Andrew does week in and week out, executing. It sure reminds me of Metaplanet, just executing incrementally, doing nothing too special day in and day out, but just blocking and tackling, getting shit done, and growing that Bitcoin per share over time.
Yeah, the only thing I would disagree on is it's when you say it's nothing special, because the proof is in the pudding. When you guys have only been publicly traded for 3.5 months and has been the most successful UK IPO in history, and UK has a long, illustrious financial history to begin with. So Andrew, I want to talk about what you mentioned just earlier about how you launched with the idea of being a Bitcoin Treasury company, yet at the same time, you also have a web design component of this business. So can you tell us a little bit of how you think about that? Is this more of a hybrid? How should investors like me or think about this? This is a hybrid kind of business, like similar to MSTR, where they have that software component and the Bitcoin Treasury component, or is it more of a pure play like Metaplanet, which sure they have one hotel, but they use them more as like marketing per se? So yeah, how should we think about this?
Yeah, so it's important to say that if you want to do a strategy that is similar to what we're doing, you do need to be an operating business. Otherwise, you're a fund, and there's different regulations that you have to comply with. So you cannot do that. There aren't any regulations out there actually that encompass a Bitcoin Treasury company because it's a new thing, right? So when I couldn't find a business that I wanted to invest in, a UK business, I decided to list my business. Which has been profitable for 15 years. It's a small business, but 250 plus clients, 30% reoccurring revenue, growth potential, et cetera. And the irony there is that the business that inspired me, strategy, is exactly that. And by Michael Saylor's own words, a failing technology company. I wouldn't describe my business as a failing web design company. It's reasonably successful, but and it's actually a great service. But I think what people have to remember is that we've got 3 parts to the business. So we've got the web design business, which is self-sufficient. Someone called Alex in the company who runs that side of the business. And then the middle bit is our medium to long-term acquisition strategy, which we'll probably talk about at a later date. And then we've got the third bit, which is our treasury management side of things, which is effectively taking the capital that the business needs for the future of the business and deploying that in a way that the business believes stores the value for the long term, which is basically buying Bitcoin. So we've got 3 elements to the business. Now, when I invest in a business, inevitably, I invest in a business for specific reasons. I don't invest in a business for its entirety. So let's take McDonald's, for example. You might buy McDonald's shares because you believe in their real estate side of their business. Yeah. You might buy a supermarket in the UK for their property portfolio. you're not really buying it for hamburgers or selling, cereal. You're buying it for elements of the business that you believe in. So our investors, some of them will have bought it because they like what we do on the web design side of things. Some of them may have bought it because they like the idea of what we could be in the future with a very, very strong balance sheet in terms of acquisitions. And then a lot of people might have bought it because they like our beliefs in terms of how we hold our capital for the future. So all we're really doing as a business is we're trying to build a very, very large business. We want to be one of the biggest companies, if not the biggest company in the UK. We're already the biggest company in the UK holding Bitcoin on its balance sheet. And we're building a business that's got a very strong balance sheet that's being run for the benefit of its shareholders, with those three different elements to it. And in the future, there might be other elements, perhaps, but obviously we've got our hands full with what we've got on at the moment. So that's very much in the future.
Got it. Thank you for that explanation. And just to give you guys some perspective regarding the web design part of their business, according to one of your investor relations decks, you have a 94% gross margin in 2024. So unlike Saylor's business, which Saylor will be the first to admit, it's a very competitive industry with probably a low profitability. Andrew's web design business, while small, is very, very profitable. So I want to pivot into what both of you mentioned earlier about how you guys are the leader in the Bitcoin Treasury space within the UK. And Jesse, I've heard you say this a couple of times, where you think each capital markets will have a winner takes most mentality. So tell me about that. How do you, maintain this lead and grow this lead? And what does it take to be the winner in the UK Bitcoin Treasury space?
Yeah, and Andrew, feel free to tack onto this, but the way I view it is that what we've seen over the last few years is Strategy has a leadership position in the US as a Bitcoin Treasury company, and is in many ways kind of becoming synonymous with how do you get exposure to a vehicle that is designed to compound your Bitcoin, right? That's the whole goal of Bitcoin Yield. And yes, they deliver, in the first 6 months of the year, they delivered plus 20% Bitcoin yield per share, Bitcoin per share. And that's fantastic. That's a very attractive value proposition. And they're the blue chip name in how you do that in the US. And now we've seen Metaplanet emerge as that in Japan. That's the go-to name if you want to get exposure to a similar kind of piece of your portfolio, right? You want to include compounding Bitcoin that's designed to grow by taking risk, by executing on a capital market plan. You can compound that Bitcoin per share, and that's what Metaplanet has been doing. And so I think you start to see a leadership role and like a narrative in each capital market of like, what's the best way to get exposure to an asset that can compound my Bitcoin? In the US, it's Strategy. In Japan, retail investors and institutions will go to Metaplanet. And I think that's going to happen in every capital market in the world. And of course, the UK is a big capital market. It's not one of the biggest, but it's quite big. There's a very material amount of wealth over hundreds of years that have been accumulated in the UK. And as we talked about, there's not currently a good way to get exposure for a lot of the capital there to Bitcoin in general, and certainly not to this idea of Bitcoin yield, of compounding Bitcoin growth. So I think that we will see in the UK, as with every capital market, a leadership name emerge where that's the trusted go-to place to take your risk exposure for how do you get not just Bitcoin exposure, but compounding Bitcoin. And so I think that's it's just a human nature thing too, that there's going to be a head and shoulders bigger than everybody else leader in that role. And we want to be it. And, I think we currently are that in the UK. We're emerging as that. But most people in the UK haven't heard of Smarter Web or Bitcoin Treasury companies in general. And I think that will change as the mechanics continue to play out.
Yes.
It's really important as well to because I completely agree with everything that Jesse has just said. But it's important to understand why the UK is not a great place at the moment in terms of capital markets. So as you very politely say, we do have a good history, but as you also rightly say, in recent years, maybe the last decade or two, not so good. So take me personally, I've invested in UK companies, but I've also invested in a lot in US companies, because the US capital markets is where it's at. That's where the good companies are. So as being someone who's lived in the UK all my life, I wanted a UK company that we could be proud of, that my children could be proud of, and I think the UK capital markets, if we get the right companies in the UK, being run well for the benefits of the shareholders, with integrity, with communication to the people that ultimately own the companies, the shareholders, then I think what you'll see less capital flowing out of the UK into these fantastic American or wherever companies, because people do want to invest. We all live and in different parts of the world, and we like to buy local. We like to buy things that come from our countries, wherever possible. The reason why we don't invest in the UK on the whole is because the companies are crap, and that's something that we're trying to change. And it won't change overnight, but if we can have multiple good companies, in different sectors, Bitcoin Treasury and other sectors, whether it's technology, pharmaceuticals, whatever, it doesn't matter. That's a really exciting place, because, a bit like one of the caps says behind me, we want to make the UK great again. And to do that, we need to all work hard and work together on growing really, really good companies. And Bitcoin is allowing us to do that. It's allowing us to build this company on a fantastic base. And so far, people seem to like that. And you can also see that from the international capital that comes in. There's a lot of international investors that like the Smarter Web company, but as we've said before, we are only just getting started. It's so early in the process. Yes, it's been a good couple of months, but I can speak for Jesse and of course myself in saying that we're tremendously excited for the next year, 2 years, 5 years, 10 years, and we just can't wait to get going with it all.
Yeah, and you guys are off to a great start. One thing that I learned from you, Andrew, you articulated so well with Jesse on the Preston Pitch. I don't know if I'm pronouncing his last name correct, but Preston's podcast is you mentioned that you have different investor bases that you have to kind of speak to and educate. So, in my point of view, because Wall Street is mostly not here, simply because most of them don't understand Bitcoin, and Bitcoin Treasury companies is an order of magnitude more complex than just Bitcoin alone. Therefore, the majority of your initial shareholders, besides friends and families, is existing Bitcoin Treasury holders. Yet at the same time, you will have to persuade them to sell their existing MSTR and Meta planets to buy your position, right? And so therefore, you have to have some sort of secret sauce to communicate your value proposition. And I think you guys have done that well. But I really want to touch upon, how do you plan to onboard the local institutions where, that's where the main capital is, right? You guys said, UK is sitting on $2 trillion worth of retirement funds in the retirement system alone. So tell me about how you guys think about educating them.
So there's different ways that you can do it, so if somebody wants to know the secret of how you get started with a Bitcoin Treasury company, probably in any market, but it certainly was the way that we did it in the UK. And what you do is you just you do something that's very Bitcoin, and you level the playing field. So you let everyone get involved. So at the outset, in our IPO, we let retail investors get involved on the same terms as everyone else. That's really, really important. We actually allowed retail investors to take part in every single raise until the regulations in the UK said that we couldn't allow retail investors to put in any more money directly. They could then do it effectively through the ATM. So that's the first thing that you need to do. The thing that you need to do after that is you just need to educate people. So, Jesse and myself, we spend a lot of time speaking to investors, explaining how the model works. and it's as simple as that, really. There's so many different types of capital in the UK. So you'll get some investors that will want to put something in with a slightly different structure to equity, for example. So this week we came up with something called Smarter Convert, which is effectively no downside for the investor. It's an equity raise at a premium for the company. There's no downside for the company either. Worst case scenario is you give back 98% of the Bitcoin effectively. So you do things like that as well. But it is all about education at the end of the day, what we're doing. And it's quite a fun job in all fairness. So we're speaking to a couple of the biggest investors in the world at the moment. And it takes time. We have to be transparent with people. Some of these institutions will take days, some of them will take weeks, some of them will take months to come up with the decision. It's a bit like if you think back to yourself, or if I think back to myself, when I first found out about Bitcoin, when I first bought Bitcoin, and then when I first realized that Bitcoin was the best asset in the world. And for me personally, there was probably 2 years, maybe off the top of my head, maybe 3 actually, between finding something, buying something, and then being so convinced that it was the best thing in the world. And whether you're talking about an investor that's looking to invest a few £1,000s in your company, as a retail investor, or you're talking to an institutional investor who could invest tens of millions of pounds, they're all people at the end of the day. And they take time with different processes, of course, because the big institutional investors have got very defined processes that they have to follow. But it's the same thing at the end of the day. It's how long it takes someone to understand something, and at the end of the day, that's our job, to help people understand what we're offering. No different to any public company, really.
Got it. Sorry, can I ask one question before you jump in, Jesse? So when it comes to educating the institutions, are they proactively coming to you, or are you cold reaching out to them, or are you using a third party to engage these institutions?
All three. So if I think about the biggest conversations that we're having at the moment, one of them came to us. One of them came to us through our broker. So our broker reached out to them. And then they wanted to see us. So it happens both ways, inbound and outbound. So we've got a really good relationship with a broker called Tennyson. They've been fundamental to our success. Really great team, a small team, but really well connected in the UK capital markets. We're also having discussions with some very, very big banks in the US. They came to us, and we're speaking to them about how they can then go out to their investors. Jesse's got a great network. I've got a, not as great network, but an okay network. We speak to people, but none of it is, hard selling. That's not what we're about as a company. We're just explaining what we do. If people want to support it, great. If they don't, that's fine as well. So we're having lots of conversations with lots of different people on lots of different stages of their understanding of what we believe, which is a Bitcoin Treasury company is the very best investment in the world.
Got it. Jesse?
Yeah, that Andrew nailed it there with it's all about value at the end of the day. And we believe very strongly that Bitcoin Treasury companies represent the best value. A well-run Bitcoin Treasury company represents the best value in the public equity landscape at this point in time. Before we get into more of that topic, you mentioned how do you convince a strategy or Metaplanet shareholder to perhaps reallocate some to Smarter Web? I want to start by reemphasizing, I think strategy and Metaplanet are phenomenal value in the global equity landscape. That said, each of those 3 companies, Smarter Web and those 2, are at different life cycle stages. I think strategy obviously mature, has lower growth. Metaplanet is in a transition period where they're still high growth, but they're kind of becoming a strategy-like company in Japan. And Smarter Web is very much still in that high growth early stage that Metaplanet was at a year ago.
Right.
And I think that those come with different risk profiles, right? Or different volatility profiles, certainly. And I think that for a Metaplanet investor, many of whom were originally strategy investors exclusively, and then realized, wait a second, this is a higher growth version of strategy, like you, Peter, I think.
Yeah, definitely.
And that became compelling, right? As you thought through the mechanics there, like, wait a second, I can be part of a higher growth version of strategy. And I think that's what Smarter Web is to Metaplanet at this point in time. I think, that Metaplanet has reached a different life cycle stage. Smarter Web is where Metaplanet was a year ago. And I think we've seen what happened over that year. It's the best performing equity in the world in 2024. So I think that's, the narrative I would encourage people to consider, at least, of the mechanics and the math of do you want to be holding the stock of a company that has already purchased a ton of Bitcoin, or do you want to hold the stock of a company that's rapidly purchasing Bitcoin? And those are slightly different things to consider. And then we can sort of turn back to like value in general. I think that Bitcoin Treasury companies in the global and investable landscape, in the equities landscape, are more compelling than anything else out there, because to date, I think that you said it very well, that it's perhaps 10 times harder to understand a Bitcoin Treasury company than to just understand Bitcoin. And we know how hard that is already. So few people have really wrapped their heads around Bitcoin. Compound interest is difficult for people to wrap their heads around. We know that. That's the famous Einstein quote that Andrew likes to use of it being the eighth wonder of the world. And so I think that for that reason, and the sticker shock of having to pay a premium to Bitcoin in order to purchase stock in a Bitcoin Treasury company, yes, you pay it. The MNAV is, maybe it's 2, maybe it's 3, maybe it's 5, maybe it's 10. But based on the yield, Bitcoin yield delivered over any unit of time, and then projecting forward, your expectations about what that Bitcoin yield per unit of time going forward might look like, when you run those numbers, it's pretty incredible how quickly shareholder value generation occurs in a Bitcoin Treasury company versus the premium you have to pay. In my view, these things are massively underpriced. And it's, I think, just because people don't understand mechanics, haven't wrapped their heads around Bitcoin enough, and certainly have like a bit of sticker shock at the reality that you have to pay a premium up front in order to get in.
Right. I want to touch more on that later, but just circling back to what you just touched upon in regards to, there's different types of investments in your portfolio for a reason. I famously remember you talking to Saylor, and you asked them, saying like, okay, well, if Bitcoin is a hurdle rate, then why should I buy your stock, Mr. Saylor, right?
That was a formative point for me to end up where I am right now. Like that, his answer rocked my world, and I have been thinking about it ever since.
Well, yeah, I don't want to tell your story. Why don't you briefly tell that story real quick?
Well, I asked that question exactly as you said it to Saylor, and he said, for a Bitcoin maximalist, Bitcoin is the risk-free rate, but there's still a place in a portfolio for risk capital, even if you're on a Bitcoin standard. And what reading between lines, what does that look like? That looks like trying to take risks in order to grow your Bitcoin, because that's, if you're on a Bitcoin standard, that's the goal, that's the hurdle rate, that's what you want to accumulate. And I couldn't argue. You can't argue with that logic of, yeah, there's a place in a portfolio for every individual or institution to decide how much do they want to hold cold storage Bitcoin, effectively risk free. Yeah, there's volatility, but if you're on a Bitcoin standard, that's your risk free. And how much of your portfolio do you want to try to grow your Bitcoin with? And that's for every individual and institution to decide for themselves what do they want to do there in terms of allocation. But that's what we're talking about here, and that's why this strategy makes sense as a concept, and it's, I think, why it's incredibly compelling as an investment thesis, because there's no other asset out there where you can reliably grow Bitcoin. your Bitcoin ownership at the end of the day. You can take risks in fiat world and hope that they outpace the like 30% CAGR that you're going to have with Bitcoin, but that's pretty tough. Like, good luck, right?
Yeah.
But with this strategy, the whole point is to accumulate more Bitcoin over time and grow Bitcoin per share. So you've taken out that risk of like, okay, we're going to get out of Bitcoin and then try to run harder than Bitcoin and then get back into Bitcoin. Instead, you're in Bitcoin the whole time, and you're just accumulating more and more by using capital market tools to arbitrage what's out there in TradFi, bring it into Bitcoin, and grow your Bitcoin per share. So it's way more compelling. And and I think, Peter, as you know, I think this is the dawn of what I think will be the biggest industry in the world over the next 2 decades.
Yeah.
I think that Bitcoin Treasury companies are the way in which they're going to be the preferred manner by which pools of capital in the world come to Bitcoin. TradFi capital comes to Bitcoin. It's going to be through these vehicles that are designed to make it easy to get access and make it easy to have Bitcoin ownership, but then offer that thing that Bitcoin doesn't do, which is how do you grow your Bitcoin per ownership over time.
Correct. As Saylor would say, right, the only thing better than Bitcoin is more Bitcoin. And so that's exactly why you invest in a Bitcoin treasury company, is you want to outpace the hurdle rate that is Bitcoin. And the only way to do that is to strategically leverage your balance sheet. Now, that's actually my next question is, Saylor famously said that he will always buy the top. So from your guys' perspective, I don't know if you guys believe in a bear market. I certainly do. Now, maybe not call it an 80% drawdown simply because there's so much buying pressure from the institutions. However, I do think it's very, very likely to have a 50% drawdown within Bitcoin. And since Bitcoin treasury companies are levered Bitcoin, they can go down further. So how do you guys think about buying Bitcoin in, call it, the later stage of this bull run, and how would you protect and defend your position from the stock price perspective?
Yeah, I guess I would start by saying that I think for Bitcoin treasury companies, we have been in a bear market for the last 7 weeks or so. I think globally there's been a contraction.
Yes.
For Bitcoin treasury company valuations, MNAVs have compressed considerably, and I think it's a fair question to ask, like, what happens to a Bitcoin treasury company when the tide goes out, right? Like, is it still possible to execute the strategy? Surely not, right? And yet, over the last 7 weeks, we've had, I think, a perfect case study of what happens when the tide goes out. I ran these numbers this morning, so I'll share them, but for Smarter Web, the share price local top was June 20th. And since then, Smarter Web has increased its Bitcoin per share by 381%, which is pretty incredible. During a 7-week-long pullback, and yet Smarter Web with Andrew doing what he does, has been able to raise capital, continue raising capital, keep buying Bitcoin every week, adding Bitcoin per share, and that's in a pretty stiff headwind of I guess sort of a climate of fear for Bitcoin treasury companies. Where's the bottom? And so that's the fundamentals have been continuing to get better and better for Smarter Web over the last 7 weeks. And I think that's kind of the answer right there of it's still possible to keep adding Bitcoin per share during a bear market. I think, and of course, that there's still the question of what happens in a major Bitcoin bear market. I know Andrew is even more optimistic than me, but I think that we could see a 60%, maybe even 70% bear market. I think Andrew thinks a little bit less than that, probably, but.
I don't think that we'll see those big drawdowns like we've seen in the past. Obviously it'll be volatile, and that's a great thing, volatility, because that's what gives you performance. But I personally don't think, because of the maturity of the asset, in recent years, I don't think you'll necessarily see that unless you get a major world meltdown, a proper economic crash. That's the only thing that would do it in my book. But the great thing about Bitcoin is that, yes, it might go down, but it also goes up, and it goes up a lot more than it goes down. So I think that's worth keeping in mind. The great thing about our business as well is that we're not leveraged. There's no real debt there. Yes, we've got this new smarter convert product, which will be a small amount of our overall treasury. But the worst that can happen there is we give almost all the Bitcoin in that portion back. So it's a bit like borrowing Bitcoin, and if it converts, then it converts. It's as simple as that, really. So the great thing about us is because we don't have any debt, we don't have to worry about a bear market. So let's say we did have a bear market, because obviously I've put my life into this business for 15 years. I want this business to be around for 10, 20, 30, whatever years. And I don't want something over the short term that we can't anticipate to cause a problem. If you look in any sector, where businesses often go wrong is where they're either financially misengineered, or they're a victim of management incompetence or greed. We're trying our best to avoid those things. So even if we did, which I don't believe we will have, a massive drawdown in Bitcoin, does it really matter? We can actually still run our model in some ways better when Bitcoin is low, interest rates are incredibly low. The model works better in that scenario actually than Bitcoin going up. Bitcoin's been sort of going up slowly in those 3.5 months since we've been listed, and the company's done okay. So where in the scenario where the model works better, then whilst no one will want me to say it, it's not necessarily a bad thing, because it means we can, in theory, increase Bitcoin per share much more aggressively than we've managed to do it. And as we've done it, we've probably done it quicker and faster than anyone else has ever done it before. So I'm certainly not hoping for a massive bear market. But if it comes, then we'll just keep going and trying our best to sort of keep the flywheel turning. And for the long term, because Bitcoin always in history has gone up more than it's gone down, quite considerably, in fact. It's nothing to really be scared about. People do, with any investment, people do need to understand what they're buying though. So, at the end of the day, if you can't stomach the volatility of something, you probably shouldn't be buying it, and the volatility is what gives you that performance. So it's a trade-off. If you want the performance, you have to accept the volatility, as much as some people find that hard to hear.
Yeah. I think it's really helpful for investors to understand the mindset of management in a Bitcoin Treasury company, because I think there will be Bitcoin Treasury companies that take too much risk, get out over their skis, and then could get in trouble in a 50%, 60, 70% drawdown. And that's based on management decisions of how they approach accumulating Bitcoin and adding Bitcoin per share. I think what investors should want to see is Andrew's mentality here of like, we don't want to screw this up. Like this, we just want this to be conservative and clean and, prepared for any bear market, even though we think that, that it might not be as severe as in the past. You want to be prepared just in case. And, the reality is like when you're at a high MNAV and you have the ability to keep issuing equity and adding Bitcoin per share, like that should be the focus. And you don't want to take on exotic financing that could screw you over in a bear market, the way that some Bitcoin Treasury companies have started to do, and then even later entrants will do even more because they need to catch up. So there's things to be wary of out there, approaches to scaling that investors should be mindful of. And we don't need to do that. We're in a leadership position where we just have to keep doing what Andrew's already got us on track to do, and that's going to be the model.
I love it. we're running up on time, so I just want to kind of wrap it up with maybe one or two more questions. But before the questions, I do want to make a comment saying that, as you guys noted, it's the MNAV that drives, a higher Bitcoin yield, right? A higher accretion. And so maybe it's from my personal selfish perspective, I would love to see your research or your analysis on, as Andrew was mentioning, how if Bitcoin does have call it a 50-60% drawdown, it actually might be more accretive. I think that will give the community even more confidence, so that in case that does happen, the MNAV stays high, so that in those periods, it becomes a self-fulfilling prophecy for you guys to generate that Bitcoin yield. So I do want to wrap it up with one final question. And you guys at this point have talked to, despite 3.5 months of operation, have been very, very effective and been speaking to all different types of people. What are one question that you think people should be asking you more of, or they're not thinking enough of, that they should be thinking of?
One question that we don't get asked very often, believe it or not, is how much of your net worth is exposed to the business. I think that's quite an important one.
Yes.
For me, it's almost everything. So there's no one that's more focused than me on that for the future. And that's not because I really care about money that much. It's for the benefit of my kids longer term. So when I look at a business, I think, okay, this is all great. This looks great, blah, blah, blah. But then what if it doesn't work? What's the pain that those management are going to be under if that doesn't work? Are they going to keep doing it? Are they going to keep doing everything as they should do? Because if it doesn't, that will make a difference to them. And I think we're quite good in that regard, in the sense that, myself, the CEO, has got a significant stake, but not just a financial stake, and also an emotional stake in the business. It's a business. I described it earlier to somebody as, I've got 3 kids. One of them was 1.5 years when I set up the business. The other one wasn't even born. So it's almost like I've got, 3 kids, not 2 kids. The middle kid is the Smarter Web Company, So I think that's quite a good question. And believe it or not many people ask us that. I don't know. Have you got any other questions that people don't ask us that they should, Jesse?
It's a really good question, Peter. I think that the thing that comes to mind, I kind of inserted the thing that I want people to think about the most, which is like growth rate versus scale. There's a trade-off there, and you want to be riding the thing that's growing the fastest horse, as their community likes to call the Smarter Web Company. Yeah. I think that's the thing I want people to think about is like, I think the reality of a Bitcoin Treasury company is you have to run some numbers for yourself to see, like, does this make sense to give up, holding, X amount of Bitcoin for less than that in terms of Bitcoin exposure today. And the whole point is Bitcoin yield. And so you have to get out the spreadsheet and understand what's involved in that. And yeah, I think the other thing that I wish people would talk about more is, there's a lot of Bitcoin Treasury companies popping up saying that what they're going to do.
Mm-hmm.
And I think that it's easy to focus on, those numbers and the opportunities there. But I think that what goes underappreciated, and it's not so much a question as like as a topic to focus on, is what has execution looked like for each of these companies, over the last month, let's say. Like, what have they done in the last month? And I think when you look at the Bitcoin Treasury landscape, there's no company that has achieved more in terms of executing, getting shit done in the last month than the Smarter Web Company. And frankly, my interpretation of it is that it's the tone that Andrew sets, having run his business for 15 years with 250 clients, having to get shit done every week in order to service those clients. And that is just ingrained into how the organization runs and how Andrew runs the business. So, Andrew thinks in terms of, what are we doing this week? What have we done this week? Have we done enough this week? We need to get more done this week. Whereas it's so easy to be like, well, we'll get it done this quarter. and that's not how this business runs. And so I think if you're looking at the Bitcoin Treasury landscape, I think the most underappreciated barometer for future success is what's the track record of execution and getting shit done for each of these companies.
Yeah, I just want to wrap this up by having an observation. I was there, both you, Jesse, and Andrew were present at the Bitcoin Investor Day, which was a Monday in Vegas. And there was all these Bitcoin Treasury companies, proverbially pounding their chest saying, we want to be, number top 10, blah, 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 blah. And I distinctly remember Andrew being the most humble out of all of them. And at first I dismissed it, but then action speaks louder than words. So kudos to you guys for speaking quietly, but carrying a big stick. Well, that's all for today. I love it. We'll have to continue this conversation as you guys evolve as a great next Bitcoin Treasury giant. So thank you guys for your time. My name is Peter Dwan, and I go by the Twitter handle BTC Bullrider. Until next time, take care.
Thank you.